Stocks trade ranged on mixed global and domestic cues. Utilities and industrials eke out gains while realty and energy drag.
Mahindra unveils its first two electric origin models, marking its entry into the electric SUV segment. The variants priced to pit them against premium ICE models have analysts optimistic on their prospects.
Siemens listed Indian arm misses the revenue estimate but delivers a strong bump up in margins and profits, surprising the street. The order book too sees strong growth. The stock climbs.
NTPC Green Energy lists at a small premium but charges up thereafter, delivering strong gains for investors on the IPO price of 108 rupees. The management tells CNBC-TV18 it is on track to meet its big capex targets.
Ola Electric launches two scooters with variants priced between nearly 40,000 and 65,000 rupees. These are the lowest priced models in its portfolio and perhaps the cheapest EV scooters in the industry.
Good afternoon. You're watching Halftime Report here on CNBC TV18. I'm Hormuz Fatakia. With me is Mangalam Malu. Another day of consolidation as we count down to the expiry for the Nifty. The broader markets are okay. It's a quiet day of trade so far, but the Nifty Bank has seen a bit of a spike in the last few minutes of the trading session. So looking forward to an interesting second half, Mangalam.
Looking forward to a very interesting second half. You know, even as the frontline indices consolidate, the portfolios are feeling a lot happier today because if you look at the four frontline indices, you have the Sensex, the Nifty, the mid-cap index, as well as the Nifty Bank. While the Nifty Bank's recent spike notwithstanding, these indices are contained in a short, range, a small range. But if you look at, the small cap index, that's the one that's really standing out in today's trading session with a gain of almost 0.8%, doing extremely well. And that's telling you that, a lot of these stocks which were beaten and battered down are now pulling back. So case in point, something like, you have Ola Electric, for instance, up nearly 14%. Yes, off its 52-week high, but again, it's recovering from the lows. We have a bunch of other stocks as well. Case in point, something like a Delivery, that's recovering from the lows as well. And a lot of these shipbuilders, which you keep talking about ever so often, Coach and Shipyard, you have, what's a company with Mazagon Dock and Garden Reach, all of them buzzing around in today's trading session. So we have a bunch of stocks which are on our radar, but it seems like an electrifying afternoon. Why do I say that? Because last night we had, the M&M launch that came by, or the electric SUVs. This morning we had news that Ola has launched about two scooters, which are the cheapest in the industry, and we'll talk more about that right away. And the other one, while we were starting the show, there was a flash at the bottom of your screen telling you that Honda has gone ahead and announced its two Activa EV products as well. Of course, they'll tell you the pricing in January, so you'll have to just wait for a wee bit to get to your EVs from Honda. So quite electrifying, Hormuz.
Electrifying indeed, right? And it's showing up in the stock price as well, particularly for Ola Electric, as you were mentioning, right? A post-listing high of 157 fell to a low of almost 66 last week and now is recovering from those levels 13% higher. And the other big trigger is the fact that Citi initiated coverage on Ola Electric this morning, and that too is adding to the stock price reaction. Sudarshan is joining in with more details on this. Sudarshan.
So Ola Electric, which currently holds market share of more than 30%, yesterday decided to expand its product portfolio and launched a wide range of scooters. And the main plus point is the price range in which the company has launched this wide range of scooters. And the price range is rupees 40,000 to 65,000, which many of the brokerages are finding it attractive. Today, Citi has come out with a note. It has initiated coverage with a buy call and target is rupees 90 per share. Citi's positive thesis is based on, first, it believes that company has a wide product portfolio. Also, it continues to focus on R&D and it has significant vertical integration, as well as it has a large scale of production. And it believes that soon to be launched motorcycle and electric three-wheelers will boost company's volumes going forward. And it expects profitability to improve as capacity utilization increases. Key risks include, first, overall weak EV penetration. Second, elevated competition. Third, continued negative perception regarding to service quality. And fourth is sustained net losses that company has been reporting. Valuation by Citi for Ola is based on, first, it says it's using sales-based valuation methodology as company is yet to break even at EBITDA level, and its target price is based on 4 times FY26 EV per sales and it also believes that Ola merits premium as it dominates fast-growing segment with attractive prospects. So Citi is overall positive on Ola, and you can see in the today's move, and currently it's up almost 14%.
Take that point entirely, Sudarshan. You know, while the stock is down about 47% from its highs, it has recently rallied about 25% from its lows as well. But Citi's thesis and more importantly, the risks on board as well. And it was just very recently, as of yesterday, where we spoke with the head of design and product at Ola Electric. And let's hear out what they had to say on both the scooters, but more importantly, the profitability.
There are three key points that I'd like to talk about these scooters. The first one is that it's built on an adaptable and scalable platform. And with that, we are able to address a variety of use cases across personal and commercial necessities in rural, urban, and semi-rural areas. The second point is that it is a durable, reliable, affordable, and efficient series of products. And we hope with this that we will be able to address the needs of a lot of high-rise demands like gig workers and last-mile mobility needs. The third point is, this is the very sort of heart of the need, which is that it's built on this Ola portable battery. And this, we think, will address the concerns of range anxiety. We already have industry-leading gross margins. With these volumes, we think we will be able to leverage our operational costs and further increase our margins. We also are taking a step in a phased manner to have our own cells and thereby further increasing our costs, or reducing our costs. We expect to launch these scooters in the timeline of March to May, these 4 scooters. And as I said, this platform is scalable and modular. We will be launching our motorcycles next year. We have said that over the next year, starting from March all the way till December, we'll be launching our motorcycles. We will be launching our Gen 3 scooters, the S1 scooters, starting from January. And further that adds to our profitability, because every generation we are able to reduce our costs and improve our margins.
All right, so that's about Ola and all things auto. So let's bring in Abhishek Gausinde, who's the Deputy Vice President Research at Sharekhan by BNP Paribas, joining in now to discuss this very space itself. Abhishek, first your call on Ola. Do you think after a big correction and the clarifications that have come in with the new launches, etc., does it warrant a fresh look, or you would stay away until, the risks subside?
On Ola side, that we don't have an official coverage, so I will not go for any kind of a recommendation. But I would like to highlight here is that even though it has got listed, it's still a startup, and it will take its own time to get the matured one. So broadly, what is happening that as parallel and similar to any kind of a startup, it has to set up itself in the market. And in light of that, we will definitely see much of action from the Ola side. It has recently launched this new set of scooters, which will be, I think, available for the market in the next year. But similar kind of activity would be seen from across the players. I think Honda is also unveiled its new e-Activa today, and similar kind of activity would be seen from the legacy players also. What is happening in the especially in the electric scooter segment, that it has reached some kind of an inflection point where from the now it has to enter into the second phase of the product. First thing, that it has created adequate kind of awareness. Now the players have to launch products at a particular at number of price points, keeping in mind that India is a large market, and the demand varies from the market to market. So in that case, we are expecting that the multiple products would come from large number of players at different price points. So that is the thing on the overall electric two-wheeler segment.
Right. Abhishek, that leaves the consumer spoiled for choice, right? With so many launches coming in. Mahindra launched one, Ola launched one, now Honda has come out with its own. But what would be the biggest factor for this? Would pricing be a factor, or would durability be a bigger factor for a consumer in this case because of the perception that is generated around Ola, despite the price point that it has put in, which is possibly among the lowest in the industry? Do you think that it is positive for a company like Ola, or would that be a negative for the company and positive for the consumer?
So when competition increase and player wants to fill up the different loopholes in the overall demand scenario, then then the consumers have a option to choose whatever is best for him. So here in the case that already said that as the FAME subsidy has been coming down, incentives are coming down, so the OEMs are developing products as per the demand of the market. So earlier we were seeing large number of products coming price point above rupees 1 lakh. But now what is happening and what is going to happen, that we will see multiple launches from many OEMs when they will launch especially electrical scooters below rupees 1 lakh. And somehow that what you mentioned about the Ola, so we can see that it is a beginning of a launch of a more affordable products in the electric two-wheeler segment, and that trend will continue from here.
Let's expand from two-wheelers to four-wheelers. Yesterday, there was the launch that came in from Mahindras as well. Not sure whether you witnessed it or not. So the pricing close to around 19 to 21 lakhs for both the products that came by. This is ex-showroom. What do you think of M&M's new launches, and would that warrant a bet on the stock, which has already seen a big run-up?
So it has been on an expected line that the management has already indicated that by early 2025 it would be start selling this electric EVs. But what is important in this particular launch is that with this new EVs, it has also launched this Inglo platform. So we will see multiple products from this platform. So Mahindra has already planned for a seven BEVs launches till 2030. So these two are the initial launches, and the price point at which they have launched are quite competitive, because even 20 lakh price points, even the IC SUVs are most popular. So it is not the giving a competition to the EVs. Also, it may gain some kind of a market share with the existing ICs. So some kind of a cannibalization may happen in its portfolio. Now on the call side, that we have been positive on the Mahindra and Mahindra, and basically on the 3 points that although the PV segment has not been doing well, but we expect that M&M would continue to outperform it. Second is that its tractor, the outlook for the tractor segment has been improving, and third is that in M&M and this its EV program has been on track. It has been launching this BEVs, and on that we can hope that it may happen that at some point of a time some kind of a value unlocking may also happen in this subsidiary under which MAE, the subsidiary under which it is launching this kind of a product. So we are on that basis, we are optimistic on the stock price performance.
But Abhishek, launches are happening 19 to the dozen right now, but are they reaching the doorstep of the consumer? Because the Vahan data seems to suggest otherwise. You can see the November registrations as of now. M&M's registrations are down almost 8% over a month-on-month basis. Even Maruti's numbers on a month-on-month basis have halved for the month of November. Do you think that these launches also may not be able to stem this tide? Is this the broader trend that you're witnessing on ground right now when it comes to four-wheelers or even two-wheelers for that matter?
I think that these two things are particularly disconnected. Whatever the OEMs are doing, they are just unveiling the products which would be available for sale by 2025. So on your second question on the November numbers, so definitely the retail numbers in November would be lower on the YOY as well as on the month-on-month basis because of the change in the festive season. So last year Diwali was in the mid of the November, and in this year it was in the first week of November. So obviously the retail sales or the base for the retail sales would be higher for higher for last November, and that's why on a YOY basis we are seeing a decline. Even similar the cases for the month on month. In October we have a Diwali Dashera, since both has happened on the this October only. So definitely the retail sales would be weak. And on that basis, OEMs would adjust or correct their wholesale dispatches in the month of the November. So post festive season, November and December are considered to be a lean month for auto retail sales. We are expecting that some kind of a boost would come from January onwards, when we see the benefit of the rural recovery, increase in this capex from the government side, and some kind of a positive factor from the Chaitra Navratri that would happen, that would fall in the March and April. So quarter 4 is expected to be better than quarter 3, but quarter 3 is expected to be somehow on the similar lines of quarter 2 only.
Final question, 2 or 3 words max. Which are your top buys and which are your top sells?
So we have a means in pecking order side, we can see that Hero MotoCorp and Mahindra are in our top pick side. We are quite cautious on this Bajaj Auto side. And in Bajaj Auto, we have a hold rating. And in the PV space, we are favoring more of this Mahindra and Mahindra compared to Maruti currently.
All right, Abhishek, thanks a lot for joining in and taking us through your views on the auto sector and the slew of new launches that we have witnessed. Time for a short break. We get you more on the markets and specific stocks on the other side. Stay tuned. Welcome back, and time for our special segment, Insight Edge. And earlier today, we spoke to the management of NTPC Green, which listed on the exchanges today with a modest premium, but then moved higher. Listen into what the management had to say on the road ahead for the company.
We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution. And we are going to commission 3,000 megawatt this year by March 25. Another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27, we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic, and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding then, which will be at the most optimum then price. FY27, we will have the 19 gigawatt commission capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat.
Right, and that's not the only management that we had today. We also spoke with Avinash Godkhindi, who's the MD and CEO of Zaggle Prepaid. They've signed a new referral partnership and agreement with MasterCard for a period of 7 years. He spoke about that and their fundraise plans, but more importantly, the outlook of 55 to 60% growth going ahead, and that's had the street excited with the stock up locked in the 5% upper circuit mark.
The board has approved 950 crores of fundraise, which is a combination of debt and equity. The shareholder decision is awaited, which should come in by 2nd or 3rd of December. The whole idea is to be able to raise, potentially have an enabling provision to be able to raise a combination of debt and equity up to 950 crores to grow both domestically and internationally, organically and inorganically. We are looking at about 50 to 55% growth this year. Mind you, last quarter was about, I think, 83%. So we are well on target for that. And margin levels, we stay at the current levels of around 9 to 10% this year.
5% upper circuit for Zaggle, doing well for itself. But time for a short break. The Nifty remains around the 24,250 mark. The broader markets are doing well. No better time to get a chart check. And Pritesh Mehta of Securities will join us for exactly that on the other side.
Welcome back. The indices are doing a lot better than what they were, half an hour ago. We did see that spike on the Nifty bank. The good part is that has held on, and as a result of which the Nifty too has moved to the high point of trade. So indices, while they were consolidating, now they've broken out a little bit of that consolidation. So we have the Nifty bank and the mid-cap index doing well. All of them up about 1/3% for the Nifty bank and the mid-cap index. The Nifty is up around 1/5%. What's actually outperforming today, like we pointed out earlier, is the small cap index. So portfolio is feeling a lot better. And in that, a lot of cash stocks, be it, Ola Electric, Fedfina, Garden Reach, Tilak Nagar Industries, all of them showing double-digit gains. So that, again, is a positive sign for a lot of the portfolios that we've seen. But for the market itself, on the whole, over the last 3 trading sessions, as we come closer to expiry, the range has been narrowing. 24,200 call was extremely active, and it has a premium of close to 87 rupees, had a premium of 50 rupees earlier. So now that the market's above the 24,250 mark, let's see whether it goes ahead and see some more short covering here or not. The other one that we're looking at is the 24,200 put. That too is equally active in today's trading session, telling you that at lower levels around 24,150 thereabouts, there is a fair amount of support. Now, for those who are writing both the 24,200 call and the put together, they are playing for a premium of almost 150 odd rupees. So, at the lower level, you are seeing some support at the 24,050 mark, whereas on the upper level, you are expecting some resistance at the 24,350 mark. The reason why I say that this range is getting narrowed is because on Monday itself, the options range was positioned between 24,000 and 24,600. That number yesterday moved to 24,000 and 24,450, and that today has moved to 24,000 and 24,350 itself. The good part, the lower end is protected, even as the upper end keeps coming down. At one point, if it does cross past the upper limit, then we may see some more short covering. But I'm not the expert here. I guess Pritesh is the expert.
Pritesh is the expert indeed, and we'll ask him that question via Securities. Pritesh Mehta is joining us. Pritesh, good afternoon. Thank you for joining in. Now, how important does this 24,350 level become for the Nifty? Now, what's your call here? And couple that up with your stock recommendations as well for the afternoon.
Yeah, good afternoon, guys. Now, see, we need to look ahead a bit more. There are several touch points between 2300 and 23,500 zone, which tells us that there is a strong bottom in place. And now, see, we have already seen the bullish crossover in our customers' spread in Nifty and Bank Nifty both. And after rallying Friday's session, we are yet to give away. In fact, we are consuming time at the top, which is a good thing the way I look into it. So I think for me, there is more leg or more room on the upside as far as Nifty is concerned. I won't be surprised that Nifty can go or make a dash towards 25,000 also in the next couple of days. The way I look into it, small cap index is outperforming. When we look at Bank Nifty, obviously we look at Bank Nifty also IT index, but small caps, the broader markets are doing well. They are outperforming. So I think we need to see this basket for at least a couple of weeks.
All right. And individual stocks, what do you think we should do?
Yes, so there are a couple of stocks that we like. The first one is Karur Vyasya Bank. Now, see, this stock was an outperformer in a way. It did not correct it when the market declined. Now it has given a triangle break on the upside. We can see target of 270 and the support is seen around 215. The second stock that we like is BEL, Bharat Electronic. Now in our customers' defense index is moving higher. And this stock is one which is leading from the front. We have already seen a base building pattern. A bullish starter break on the upside. The upside target are seen around 340 and stop is around 292.
All right, Pritesh, thank you so much for joining in, sharing with us your views on the index and specific stocks as well. Time for a short break. Up next, we focus on stocks that are moving in trade on the back of news updates. Stay tuned. Welcome back. The markets are looking to break out from that range, but the broader markets are doing well for themselves and plenty of movers within that space itself. And Siemens is one of them that is surging after the company's margins, EBITDA and profit beat estimates in the quarter that ended in September. Vivek is joining us to tell us more on that. Vivek.
Well, that's right. Good set of numbers. Remember, Siemens follows a September year ending, so it was the last quarter for their financial year. When you're talking about the numbers themselves, revenues are in line to slightly below what the street was anticipating or what our own poll was indicating. But EBITDA margins and PAT all above. And when you're talking about PAT, also aided by a higher other income component this time around. Going through the numbers quickly, revenues higher by almost 11%, EBITDA higher by 34%, EBITDA margin expansion of almost 250 basis points, and profitability higher by 45%. Now, segment-wise, what did well? Segment-wise, energy and mobility did better than what was estimated, while on the other hand, smart infra as well as digital industries were lower than what was anticipated. New order inflow was very strong, over 6,100 crore, and this is up almost 36% on a year-on-year basis. Remember, when you're looking at last quarter numbers, there was a one-off very large order as far as the HP locomotive order was concerned. Now, along with that, the company also announced a capex increase of close to 100 crore. As far as the power transformer factory in Kalwa is concerned, the company is looking to expand the range of its product portfolio. Along with that, key to watch out for, number one, would be what is it that the management will do when it comes to the demerger and the eventual listing of the energy business.
All right, we'll take that point, Vivek. Just keep an eye out on Trent, though. That stock is now gotten new wings. It's up around 3%, up at the high point of trade. Remember, it moved to that 6,900 rupee mark very recently. Before the results, the stock was trading at around 71, 7,200 odd, fell all the way down to 6,200, and from there has seen a steady recovery at around 6,900. Maybe the street bought the dip, believing that the minor disappointment that there was in the second quarter may be more than made up in the third quarter, largely because the third quarter is seasonally strong for the festive, related purchases, etc. We'll keep an eye out on this one, even as this sees recovery from the lows of trade. We were talking about how the Nifty bank is doing well. Just pull up the Nifty IT index. So both the engines of the market now doing well for the frontline index. So the Nifty bank is at the high point of trade. Pull up the IT index, and that's led by Infosys. The intraday chart of Infosys comes up for you. That's actually mirroring the chart of the Nifty IT index itself, which is now moved towards the higher end of today's trading range. So all guns blazing, closer to 24,300 for the Nifty right now, up in triple digits. A 100-point up move is what we're seeing. But one of the stocks which has been almost 21, has been surging, has reported a 21% jump in its revenue in the second quarter, is a recent listing, which is Sagility, up around 7%, up in double digits in the last two trading sessions. Rima, tell us more.
Well, so Sagility reported their numbers on Monday post-market hours, and after that, the rally started. So the stock was up 10% yesterday, and today as well, it's seen a follow-up. Remember, this is one of the recent listings. It listed on the 12th of November. The issue price was 30, and the stock didn't do too much till they came out with their numbers. Now, just a quick word on what the company does. Now, this is a company which provides tech solutions to the US healthcare ecosystems. But about 85 to 90% of its revenues comes in from the US health insurance companies, where Sagility provides services like claims management, enrollment, premium billing, care management. So it's a tech company which caters 100% to the US healthcare, and in that largely more to the insurance companies rather than the hospitals and clinics. Now getting to the numbers. One, there was a pickup. Again, we don't have too much history. It's a recent listing. But going by the Q2 numbers, there appears to be a pickup in their revenue growth. 21% on a year-on-year basis, higher than the FY24 top-line growth of about 12.5%. Secondly, margins are in line with historical levels. Q2 margins have come in at 22.7%. You look at it sequentially, there is a big jump, but Q1 margins had one-offs. But 22.7% is in line with the FY24 margin, and therefore profits too, have looked up for the company both quarter-on-quarter and on a year-on-year basis. Back to you.
Showing up in the price as well is Rima, 7% higher for Sagility. And since Mangalam was mentioning Trent, 6955 was the closing on the 6th of November, which is the day before the results were declared. It's at 6909 was the high of the day. So it's almost recovered all of the post-result losses. So at the highest point of the day is Trent. Good going for the Tata Group company. Time for a short break. On the other side, Manisha Gupta joins in with Sabyasachi Ray, the Executive Director at Gem and Jewellery Export Promotion Council. Stay tuned.
Welcome back, and joining us on the show now is Mr. Sabyasachi Ray from GJPC. Mr. Ray, thank you so much for joining us. And first of all, with a good number, and for the month of October, when it comes to gem and jewellery exports, and within that, gold jewellery exports, cut and polished diamonds, lab-grown diamonds, everything is seen a strong percentage increase. Is November building up on that?
Manisha, if you see, everywhere there is a lot of positive sentiments, including, on our, of course, we are not round the corner, but what we have seen in October is a general uptick in terms of exports, in terms of diamonds, which has brought a lot of cheer in our market. But you have to also understand, if you remember last year in October, that call was given with regards to the import of rough diamond freeze and etc. So it can be a reason. We have to see how November and December go. We are very cautiously optimistic that we can say. We are also getting good feedback from the US market, what is happening. And also what we have understood is in China, the sentiment with regards to diamonds, which has grown negative, maybe in the beginning of the year or so, or the last year, it has, what we understand from our latest data is that it has grown neutral. That means the negative sentiment is out, it has grown neutral. And what we also believe is that it should start going positive. And also, if you have seen a lot of new campaign lines have come in US in terms of diamonds by De Beers, and more campaign in China is coming out by Chow Tai Fook and etc. In India also new campaigns will be coming. So we are very upbeat about the diamond, but the jewelry in comparison have done fairly well. I'll say that it is not fully well, but fairly well. Of course, the Middle East numbers are very good. And the US numbers are very neutral. So if you look at our Seeds exports, it remain neutral. It has not gone down. So that way, though the diamond prices to an extent, have softened over time, but still the diamond jewelry prices have not softened, and that has shown very strong numbers from Seeds and also from India. So that way, if you ask me, of course, we are very positive. And also with the gold prices, what we have seen that in the recent, maybe in the last week or so, it is showing at least some sort of, softening. So all these factors together, I think it's a very good time for our sector going forward.
All right, that seems assuring. Mr. Ray, also, there have been a bit of a concerns about diamond resales, diamond certification within the Indian market. How is GJPC dealing with that one? And there have been a couple of meetings in Delhi as well. I mean, you were part of one of those. What can we expect from that?
See, one of the things, always you have seen, Manisha, that GJPC always goes on the right side of the consumers. So we are the one who have always talked very strongly about hallmarking. We are the one when, if you remember, the undisclosed mixing was happening. We are the one in diamonds who have come out with specific guidelines how we should go forward. Sure. We have come out with new machines, how the machine should be there. With Natural Diamond Council, we have worked. And recently also, what we have done, in our council, we have both components, the lab-grown diamond, growers and the manufacturers, and the lab-grown diamond jewelry manufacturers. We have a panel, and also we have a natural diamond jewelry panel. So both of us sat together, and we have come out that for Indian consumers, we should be also coming out with equal norms, what is there in US, which is called the Federal Trade Commission guidelines. Just like our Consumer Affairs Ministry, US Federal Trade Commission looks after their consumer interests, and they have come out with very strong guidelines how the lab-grown diamonds and the natural diamond nomenclature will happen. So we had started the dialogue with our Consumer Affairs Ministry, and what they have done the first stakeholder meeting. Based on that, they have come out with certain guidelines. One of the things what we have also pointed them out, that right now if it is diamonds, they have also concurred with the same. As per FT guidelines, if it is diamonds without any adjective or prefix, it will be termed as natural diamonds. And if you are selling lab-grown diamonds, you mind lab-grown diamonds, you're not talking about synthetic diamonds, lab-grown diamonds, then it should come exactly in absolute clear terms, lab-grown diamonds together. So that is one of the things what has been agreed. However, based on the stakeholder meeting, to come out with nomenclature, they are forming committees under the BIS. Just like hallmarking, they will come out with very specific nomenclature guidelines. So this is the first meeting based on that, whatever they have come out with the press note. In the press note, the top line in the headlines, they have made very correctly, they mentioned that lab-grown diamond should be mentioned as lab-grown, but somewhere that mixed up with synthetics and lab-grown, which they should not have done.
Well, that clarity will come. So a final question really, and this is about the Indian markets, and we know there are 48 lakh weddings, and this is not a new thing really, because we do see those amount of weddings happen perhaps every year. What is the kind of demand that you're seeing for the Indian markets now?
As I have told you that also with the recent gold prices as it's going, there's a lot of cheer into the market going forward into the marriage season. And you're right. Right now we had certain promotions in Bihar and etc. And we have seen some phenomenal things happening in the retail, so nobody has time to talk. So the buying season is going very well into the marriage season. I believe that the next 15 days, 20 days will be absolutely peak for the marriage season. And then again, it will start sometime from 20th December and etc. So this is how the season is. If you ask me how is the season is rocky. That much I can tell you.
All right, rocking it is.
Indeed, rocking 48 lakh weddings. That's some number. Mr. Ray, thank you so much for joining in. Manisha, thanks for joining in as well.
By the way, 48 lakh weddings over the next 34 days implies there's a wedding every 1.6 seconds. So by the time we've had this conversation, there are 8 or 9 weddings which have happened. So what we'll do is, before the director says a few more wedding happens, we'll take a short break. Some more will happen during that break. On the other side, we have business lunch taking all the market action ahead.
Welcome back, and the markets continue to do well for themselves as we go into the second half of the trading session. The small cap index continues to remain at the high point of the day, 1% higher. The metals index is doing well for itself. The mid cap index too is contributing to some of the gains in today's trading session. Some of the movers that I wanted to mention though, CDSL is one of them, continuing to do well for itself, 2% higher. Railtel is one of the railway PSUs that is doing well, along with RITES, Titagarh, Ircon, all of them that are doing very well for themselves in today's trading session. But with that, it's an official wrap on this edition of Halftime Report from Mangalam, me and the team that put this show together. Thank you for watching. Business Lunch now takes the action forward.